Hello traders. Welcome to KP Technical.
11 Most Essential Stock Chart Patterns. Stock chart patterns are an important trading tool that should be utilized as part of your technical analysis strategy. From beginners to professionals, chart patterns play an integral part when looking for market trends and predicting movements. They can be used to analyze all markets including forex, shares, commodities and more. 1. Ascending triangle. The ascending triangle is a bullish continuation chart pattern that signifies a breakout is likely where the triangle lines converge. To draw this pattern, you need to place a horizontal line, the resistance line, on the resistance points and draw an ascending line, the uptrend line, along the support points. Two. Descending triangle. Unlike ascending triangles, the descending triangle represents a bearish market downtrend. The support line is horizontal, and the resistance line is descending, signifying the possibility of a downward breakout. 3. Symmetrical triangle. For symmetrical triangles, two trend lines start to meet, which signifies a breakout in either direction. The support line is drawn with an upward trend, and the resistance line is drawn with a downward trend. Even though the breakout can happen in either direction, it often follows the general trend of the market. 4. Pennant. Pennants are represented by two lines that meet at a set point. They are often formed after strong upward or downward moves where traders pause and the price consolidates before the trend continues in the same direction. 5. Flag. The flag stock chart pattern is shaped as a sloping rectangle, where the support and resistance lines run parallel until there is a breakout. The breakout is usually the opposite direction of the trend lines, meaning this is a reversal pattern. Learn more about breakout stock patterns.
For more stock market updates, subscribe KP Technical.